Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of corporate filings with a twist. You guessed it, this report involves lots of interesting details about private investments that can be a bit of a roller coaster. And let me tell you, this filing has some serious ups and downs. So grab your popcorn because we're about to decode the Constitution Capital Access Fund LLC's latest prospectus. This isn't just another dry financial document, it is a peek into how this fund aims to make you money, and more importantly, all the ways it might not. First off, let's talk about the money. They're aiming to raise up to a hefty $2 billion. That is a lot of zeros, and it signals a big play in the private asset market. Remember, this fund isn't about buying stocks on the open market. It is about diving into private investments like direct stakes in companies, investments in private funds, and things you generally don't see on your everyday stock exchange. Notice that 3.50% sales load for class of shares. That is what you pay up front just to get in the door. Then there are other fees, management fees, distribution fees, all chipping away at your potential returns. It is important to see that Class I shares have no sales load, meaning more of your money goes to work from day one. Their main goal is long-term capital appreciation, which sounds great, right? But how do they plan to do it? By investing in private assets that they believe offer attractive risk-adjusted returns. Think private equity, private debt, and other less liquid investments. They define high-quality investments, not by credit ratings, but by attributes like strong management teams, attractive financial profiles, and clear value creation plans. This tells us they're looking for solid companies, but in a market that is notoriously hard to get into and even harder to exit. Now, let's dive into the financials, specifically the financial highlights. In the year ended the 31st of March 2025, Class A shares saw a net investment loss of 1.07%. This means that after all income and expenses were accounted for, the fund lost a little bit of money from its core operations. This isn't necessarily a red flag for a private equity fund, as their returns often come from capital gains over the long term, but it is something to note. But look at the total return for Class A shares. It was 8.22% for the year ended the 31st of March 2025. That is a positive return, and it shows that despite operational losses, the actual growth in the investments more than made up for it. This is the heart of private equity. The big gains often come from selling investments after years of growth. And this table suggests they're on that path. They're also using leverage, as indicated by the total borrowings. For Class A shares, they had about $58.6 million in borrowings. Leverage can amplify both gains and losses. On one hand, it can juice returns. On the other, if investments go south, the debt still needs to be paid, potentially magnifying losses for shareholders. Now, they're very clear about who is in charge. They substantially rely on the advisor to manage the day-to-day activities of the fund. This means the quality and expertise of Constitution Capital PM, LP are absolutely critical. If the advisor makes bad calls or if key personnel leave, it could seriously hurt the fund's ability to achieve its goals. And they face stiff competition. They'll be up against other investment funds, banks, finance companies, and even hedge funds venturing into private markets. Many of these competitors are bigger and have deeper pockets, meaning they might get first dibs on the best deals or offer better terms. Here is where it gets interesting. The incentive fee is essentially a performance bonus for the advisor. They get 10% of the net profits. This is common in private equity, but it is crucial to understand that this fee is calculated on both realized and unrealized gains. So they could get paid based on paper profits that might never materialize if the investments don't actually sell for that price. This can create an incentive for the advisor to take on more risk. This is a big one for private assets. Valuing these investments is tricky because there isn't a ready market. They rely on fair value determined by the advisor, which is inherently subjective. This means the reported net asset value could be higher or lower than what investors eventually realize. And there is a potential conflict of interest in how these valuations are made. They lay out a whole chapter on risks of investing in private assets. This includes buyout risks, venture capital risks, and special situations risks. It is a reminder that private equity is not for the faint of heart. These investments are illiquid, unpredictable, and can involve significant losses. This isn't a one-stop shop for fees. You pay fees to the fund, and then you indirectly pay fees to the underlying private funds the fund invests in. This multi-level fee structure can significantly eat into your returns, and they admit you may be subject to higher operating expenses than if he or she invested in a portfolio fund directly or in a closed-end fund that did not invest through portfolio funds. This phrase really highlights the illiquidity risk. If too many shareholders want their money back at once, the fund might have to dump investments at bad prices, hurting everyone. They plan to offer quarterly repurchases of no more than 5% of net assets, but even that is not guaranteed and can be suspended. They also plan to invest outside the US, including in emerging markets. This adds another layer of risk: currency fluctuations, different legal and regulatory systems, and potential political instability. They explicitly mention the increased tensions between Russia and Ukraine and its potential impact on global markets, which is a very real concern. Analysis. So, what is the story here? Constitution Capital Access Fund is aiming for high returns by tapping into private markets, a space known for its potential, but also its significant risks. They're relying heavily on their advisors' expertise, and that comes with a hefty fee structure, including an incentive fee that could push them towards riskier bets. The valuation of their private assets is subjective, opening the door for potential discrepancies between reported and actual values. Plus, they're not just investing in one thing, they're investing in other funds that then invest in companies, meaning layers of fees and a lack of direct control over the ultimate investments. The illiquidity of these private assets is a major theme, meaning your money could be tied up for a very long time, and there is no guarantee you'll even be able to get it back when you want it. The competition is fierce, and global risks like geopolitical instability in Eastern Europe are explicitly called out as potential headwinds. The numbers in the financial highlights show that while there was a net investment loss for class of shares in the past year, the total return was positive, indicating that their long-term investment strategy might be working. However, the leverage they employ means that any downturn could be magnified. The reliance on the advisor is a double-edged sword. Their expertise is key to success, but it also means that any misstep by the advisor could be detrimental. In conclusion, this fund is a high-risk, high-reward proposition. It is designed for sophisticated investors who understand the illiquidity and volatility of private markets and can afford to potentially lose a significant portion. If not all of their investment, it is not for someone looking for easy access to their funds or predictable returns. The potential for significant long-term capital appreciation exists, but it is overshadowed by substantial risks. Alright, that is our breakdown of the Constitution Capital Access Fund prospectus. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.